Alright, I wasn't going to do an Iron Condor video, but I think I'll do it because Amazon looks pretty interesting. It hit this peak right here, this high, probably a resistance if I were to look at the historical. And then it just pulled way back over all of September or most of September, and it's coming into the 10-day moving average. So I'm hoping for next week it be somewhere, the price end up somewhere between the 50-day moving average and the 10-day moving average, and that would be within this larger channel right here. This channel is looks like it's around 212 to 240. It's a pretty big channel. On the downside, it looks like there's maybe some confirmation here and here showing that that bot or that support is a valid support, and it's coming right back into it. So iron condors are when you don't know which way it's going to go, but you know it's going to stay within a particular price range. So I'm going to do a credit put on the bottom and a credit call on the top, and even if one of those ends up in the money, you win on the opposite one. So it's kind of a win-win. You do hedge your bets that way. Let's go into the trade lab, take a look at it. Right now it has the bottom being 215, so 215 right here. So this says that on Friday of next week, the price going to end up between 215 and 220. So that's kind of bearish. That means it's got it's not going to increase any because it's at 219, so it's going to stay below 220 all of next week, and then it's going to but the price is going to stay above 215, and for that you get $180, which is a premium for both credits put together. Max loss is only 70. So the max loss is the premium that you got minus the difference between one of these. So between 212 and 215, or 215. Because only one could trigger at any given time. So that's a 1 to 3 ratio, but look at the percentages. It's a 77% chance that I take on max loss at 70. And it's only a 12% chance that I'm gonna max out the profit at 180. I really don't like that. This is kind of a strategy for people that buy options and not so much sell options. When you're selling options, you want the majority of the probability to be that you're going to keep your premium. Otherwise, there's really no reason to do it. So let's take a look. Let's move this a little bit. Let me try moving the top. Let me go to 222.22 and then 225. So what that's doing is it's spreading out the my profits area where I can get profits. So you can see how this expanded right here. So now if it moves anywhere between the 215 and ends up anywhere between the 215 and the 222, then I will get the max profit, which is 165, and the max loss is 85 now, just because the spread is bigger. Almost a 1 to 2. So that looks a little better in terms of trade, but there's still a high probability that the price is gonna land outside of 222 and 215. So let's tweak it a little more. Let's go down to, let's say, 210 and 212.50. Then on the high end, let's go 225 and 227. So now my window is like a 12.5 point window, which is a pretty big window. Let's see, safe strategy. So now you can see my window expanded. Max profit is 141. Max loss is 109. and my break even is either at 211 or 226. That's where I give up all my premium. Max loss is 109. The max loss period is if it ends up right here or it ends up over here. So this, it would have to end up over to, looks like 226.41. So let's call it 227. It'd have to end up over 227 for max loss or under 210 or 211 for max loss. So let's look at the chart. 227 is right here, so that's my 50-day moving average. Last time I was at 227 was, I mean, what date is this? The 23rd, so like 3 days ago. I was at 227. Last time I was at 215. It hasn't hit 215 since August. So that's why my probabilities are the way that they are, is because the 3-day-old price is probably a little riskier on that side. So let's go back to the trade lab, tweak it a little bit. This is why Iron Condors are kind of difficult, because you have to know the stock a little bit. And so I could put this back at 215 just for the heck of it. And then I'll work on the upper end. So let's do 227, 230. It's a little more bullish, keeping premium very, very close. So now 141, there's a 27% chance that you hit max profit, and 109 is the max loss. There's a 62% chance of that. Your break evens are at 213 and 229, which is a little better, but you know what? I could spread this way out. So I can spread this, let's say, go all the way to 230 and 232, and then on the bottom end, just for it to be, I want to kick my percentages higher. I'm good with $100, but you can see these still aren't making much sense in terms of the percentages, because it looks like let's go. It looks like people are real confused on what Amazon's going to do. So let's keep widening this, see where I can mess with my profitabilities. $95, that's okay. And remember, this is 4 trades, so it's 65 cents per. So it's going to probably bring it down closer to 90. But now look, we have a 50-50 here. But look at my max profit is only 95 and my max loss is only 155. So this really doesn't make any sense. I'll probably re-look at it on Monday to see if these percentages change, but I'm going to keep this spread at between 210 and 232. I don't understand why there's no premium, or why the percentages are that way, because 232 is all the way up here. That was 3 weeks ago, or 2.5 weeks ago that it hit that. And then on the bottom end, 212. It hasn't hit 212 since maybe it hit 212 here, but it definitely hit 212 prior to July. So it looks like they're predicting it's going to break out of this channel. So hopefully it validates this channel today, and then it'll be a better trade on Monday.